Ladies and gentlemen, good day and welcome to the Matrimony Q4 FY26 earnings conference call. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Jairam Shetty from ICICI Securities. Thank you, and over to you, sir.
Good evening, everyone. On behalf of ICICI Securities, I would like to welcome you all to Q4 and FY26 earnings call of Matrimony.com. From the company, we have Mr. Murugavel Janakiraman, MD and CEO, and Mr. Hari Govind Krishnaswamy, CFO. The call will begin with the brief management remarks, followed by a Q&A session. I would like to hand over the call to Mr. Janakiraman for his opening remark. Over to you, sir.
Thank you, Mr. Jairam Shetty. Good evening, everyone. We achieved double-digit billing growth of 10.5% in our matchmaking business. We completed a share buyback in Q4 of FY26, amounting to rupees 58.5 crores to reward our shareholders. We will continue to evaluate opportunity to reward our shareholders in the future as well, subject to necessary board and shareholders' approval. Considering the immense potential to grow our personal service segment, we opened our first ever Elite Matrimony Center in Hyderabad in Q4 of FY26. The store is first of its kind in India and poised strategically to strengthen our premier matrimony business going forward. AI is now embedded across many of our core products. Several new capabilities are going live in the current quarter, and the foundation set to scale AI across every business and function. Now coming to the results. In Q4, on a consolidated basis, we achieved a billing of rupees 126.1 crore, a growth of 9.9% year-on-year and 7% over previous quarter. Revenue at rupees 116.8 crore, a growth of 7.9% year-on-year and 3.2% quarter-over-quarter. For the full year, consolidated billing was rupees 488.6 crore, a growth of 8% year-on-year. Revenue at rupees 460 crore, a growth of 1% year-on-year. Key highlights for the matchmaking business in Q4 are as follows. Billing at rupees 125.4 crore, a growth of 10.5% year-on-year and 7.2% quarter-over-quarter. Revenue at rupees 116 crores, growth of 8.4% year-on-year and 3.5% quarter-over-quarter. Paid profiles were 2.34 lakhs at the end of Q4, a decline of 4.3% year-on-year and growth of 3.3% over previous quarter. Average transaction for the matchmaking business increased by 15.3% year-on-year and 3.6% over previous quarter. We created 2,300 success stories for the quarter. Key highlights for the matchmaking business for the full year are as follows. Billing at rupees 485.2 crores, growth of 8.3% year-on-year. Revenue at rupees 455.7 crores, growth of 1.3% year-on-year. Average transaction value for the matchmaking business increased by 11.9% year-on-year. We created more than 1 lakh success stories during the year. Now coming to the marriage service and other business, Q4 billing was rupees 73 lakhs, a decline of 40.7% year-on-year and 19.4% quarter over previous quarter. Revenue at rupees 85 lakhs, a decline of 36% year-on-year and 24.7% over previous quarter. EBITDA loss for the quarter was 5.7 crore compared to rupees 3.2 crore in Q3 and rupees 4.9 crores in Q4 of last year. The losses also include new initiatives such as many jobs. For the full year, billing were rupees 3.42 crores, a decline of 25.9% year-on-year. Revenue was rupees 4.29 crore, a decline of 27% year-on-year. EBITDA loss for the year was rupees 15 crore as compared to rupees 14.5 crore in the last year. Now coming to Q1. We are highly confident in delivering robust financial performance, anticipating either double-digit billing growth or high single-digit growth in billing, and revenue growth of double-digit revenue growth, and more than doubling of profit compared to Q1 of last year. Let me now pass on to our CFO Ari Govind to comment on the key profitability.
Thanks, Muruga. Our EBITDA margin for the matchmaking business in Q4 is at 22% as compared to 19.2% in Q3 and 17.7% a year ago. Marketing expenses for matchmaking in Q4 are at 43.5 crores as compared to 43.9 crores in Q3 and 46.7 crores a year ago. Excluding marketing expenses, our margins in matchmaking are at 59% as compared to 58% in Q3. For full year, our EBITDA margin is at 19% as compared to 20.5% last year. Marketing expenses are at 180 crores as compared to 185 crores last year. Excluding marketing expenses, our margins in matchmaking are at 58% as compared to 62% last year. On a consolidated basis, our EBITDA margins in Q4 are at 12.4% compared to 11.3% in Q3 and 10.8% a year ago. Tax rate for the quarter stood at 18.1%. PAT is at 9.7 crores and a growth of 18.9% year-on-year and 17.2% quarter-on-quarter. Share of Q4 loss from Astrovision, our associate company, is 4 lakhs. For full year, on consolidated basis, our EBITDA margin are at 11.4% compared to 13.9% last year. Tax rate for the year stood at 21%. PAT is at 34.2 crores as compared to 45.3 crores last year. Share of loss from Astrovision, our associate company, is 33 lakhs as compared to 11.6 lakhs last year. Cash and investments closing balance is at 308 crores. ROCE is at 11.2% for the year. Considering the positive developments as explained by Muruga, we expect the PAT to more than double in Q1 compared to Q1 of previous year. I would like to end with the customary safe harbor statement. Certain statements during this call could be forward-looking statements on our business. These involve a number of risks and uncertainties that could cause the actual results to differ materially from such forward-looking statements. We do not undertake to update any such forward-looking statements that may be made from time to time by or on behalf of the company unless it is required by law. Thank you.
Yeah, we are open to take questions.
Thank you. We'll now begin the question and answer session. Anyone who wishes to ask question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Premalal, an individual investor. Please go ahead.
Good evening, Mr. Muruga.
Yes, please go ahead. Please go ahead.
Sir, when are you going to remove the pledge shares as well as promoter holding increase quarter on quarter, but there is no BSE announcement? That is the one thing. How much are you spending ads on this particular year? Because every year you are spending 180 crores. But when you see that the net profit, there is no growth and all. These are the two questions from my side.
Let me answer that. The marketing expenses. Marketing expenses at this point of time is expected to be at a similar level until otherwise, if there is any strong need to increase or decrease. So we tend to operate at a similar level. In terms of PAT, we just told we expect Q1 PAT to more than double compared to the Q1 of last year because so we now started getting operating leverage because last year we introduced a 1-year package. The benefits start going to happen. Plus also we've been growing the double-digit growth. So marketing remained at a similar level and revenue moving up, billing moving up. So we just told that we expect a sort of either double-digit billing growth, high single-digit billing growth, or revenue double digits, PAT more than doubling compared to Q1. So PAT growth is going to be good this year. So in terms of share price, a personal thing. So and probably at some point I remove the pledge. So yeah, it's nothing on the company side; it's on the personal side.
Yeah, there is a BSE announcements increasing the shareholder. There is no announcement for BSE announcements. Sir.
Sorry, can you come back?
That when the by the promoter, right? There is no announcements of SAT announcements when he bought and where he bought and all.
No, that is an automated intimation which happens.
No, quarter on quarter only showing, but when the promoters are buying or selling, they have to announce the announcements, right? But that is not showing.
That's an automated thing which has happened since last few years. We'll just check and come back.
Yeah, please. Thank you. Thank you, Mr. Murthy. Yeah.
Okay.
Thank you. A reminder to all participants that you may press star and 1 to ask question. The next question is from the line of Anuj from First Capital. Please go ahead. Mr. Anuj, sir, please go ahead. Mr. Anuj, sir, could you please unmute yourself? Since there is no reply from the line of Mr. Anuj, I'll promote the next one, which is Srinivas from Truth Value. Please go ahead.
Yeah. Sir, my name is Srinivas from the True Value Advisor. I have 3 questions. So I was going through your presentation and everything. You said the year-on-year income is around 483 crores. That is just a small 1% of increase. As well as the expenses is also around 440 crores, a small increase of 2%. Whereas your profit margin has come down by 25%, it is around 34 crores. Something is not adding up in your net profit. This is one thing. And second is, so you have introduced that Bharat a coach. What is the update on that one, sir? So just I would like to know how much the income you are gaining on that one, which is adding to your total revenue. This is point number 2. And 3 is you say that marriage service business segment. If I as per yours and if I see there is a losses is mounting on this one quarter on quarter. So what is the plan to this is bleeding it also eats up the consolidated profit of your our overall the revenues and profits. So what is your plan or any demerge are going to take place or any some other plan for this one, sir, to reduce the losses and also increase the profitability of the company? Hello?
Yeah.
So on the PAT reduction, we've got a reduction of close to 24%, right? This is contributed by 2 things. One, of course, there is a marginal drop in total income, but there is an increase in total expenses by 2.7%, right? That is contributing to almost 9 crores, and there is one finance income has reduced. The finance income has reduced on account of 2 factors. One, the investment balance have come down because we are also rewarding the shareholders by buying back, so our funds are getting utilized. Second, also in terms of the investment yield, which has come down due to the repo rate reduction. So because of which close to 5 crore reduction has happened. So that has contributed to a 24% drop in PAT. So On the Bharat Ek Coach.
No, Till You Marry 1 year pack.
Yeah.
Billing it.
On the Till You Marry pack, which is the 1 year pack, we started way back in March 25. So if you look at the coming quarters and the last quarter, the billing has translated into revenue. It has started flowing to the P&L from Q4 onwards. So you see that in the coming quarters, our billing growth will be in line with the revenue growth.
I just want to add what Ari Govind has said. Look at till the last year, that FY25, the billing with the gap revenue, so more or less will be the same or very close. Last year, the billing was 480 crore, but the revenue was 460 crore, almost 28 crore difference between billing and the gap revenue on account of the longer tenure package, 1 year package that you launched. So that will the benefits going to come from this quarter onwards. And in terms of investment on the Bharat Ek Coach, it's an investment into one of the AI-based astrology company. It's just a recent investment. It's one of the startup. So we see an opportunity, and so it's a startup, and we'll continue to monitor. And again, it's a very, very early stage startup. We invested and owning certain percentage of the company. In terms of the wedding services, we have moved the model from subscription service-based model. We believe the model now we are adopting. We believe there's opportunity. We continue to experiment, and we expect this year can be some kind of better traction on wedding services, because we see the new model can be the way forward.
Thank you.
Thank you. The next question is from the line of Tanya Arora, an individual investor. Please go ahead.
Hi, sir, and congratulations on good set of numbers. So I just had a couple of questions. First one is on the enterprise EBITDA margins. So they have improved sequentially to almost 12.4% in quarter 4. So what is the margin trajectory that the investors should expect for FY27?
No, as you told, starting Q1, we see that no profit is more than doubling. So we see that the margins, everything going up very well. So.
Right. And on the paid subscribers additions, they continue to remain soft despite the improving billing. So is the company prioritizing any premiumization over the volume growth?
No, it's a combination of both. We see the traction on both the things. Obviously, personal services are growing much better percentage compared to the online, but we see the traction online service as well. So we see the starting this year that there'll be a momentum in the volume growth as well. Yeah.
All right. And lastly, on the marriage services and other segment, so that has continued to report losses, and the EBITDA losses are also widening in Q4. So by when can we expect the segment to break even?
In terms of Q4 losses, we've taken some impairment. That's one of the reasons there's increase in losses. And second thing that is we see the wedding services, we definitely move into a new model, and we believe, that model can be a big opportunity. Again, it's still in the stage where you are experimenting certain things. But we see definitely traction in other services. But in terms of when it will break even, definitely it's a long way to go. But it's more of getting the product market fit right and getting the opportunity right. Then it's more of scaling up. So we are not looking at break even in the near future, but more of getting that model right, and where we want to create a very large opportunity for our organization. So I believe the new model, we believe possibly can be a right model. But anyway, so give us a couple of quarters or maybe end of the year where we'll be in a better position to comment on that.
Right, sir. That's really helpful. Thank you.
Thank you. A reminder to all participants that you may press star and 1 to ask question. The next question is from the line of Dharmesh Patil, an individual investor. Please go ahead.
Hello, good afternoon, sir. So my first question was on the billing side. So as we can see, matchmaking billings have grown 10.5% year on year in this fourth quarter, which is, much more than the revenue growth of 8.4%. So I wanted to ask, what is driving this acceleration in billings, and how sustainable is this trend going into FY27?
We believe it's sustainable, so we expect sort of double-digit billing growth also, possibly this year as well. So either high single-digit growth or double-digit growth for the FY27 as well. What is driving? The combination of multiple factors, the growth in personal services, growth in the online services, because so now the profile growth also happening, that's sort of contributing to an increase in the first-time billing. Now we're also seeing the traction in the renewal also. So I think we have taken a sort of couple of years to get things right. Now there's a momentum. We expect the momentum to continue.
Okay, sir. So my second question is on your marketing expenses. So we can see that they have also declined by about 6% in this quarter. So is this due to efficiency? Yeah, go on, sir.
Yeah, no, it's a more of the marketing. It's about, optimizing it and spending what is really required. So we expect the marketing will be on the similar lines until otherwise, if we decide to step up on something or if there's a scope to reduce also, we do that. Time being, we can assume the market will be on the similar lines.
Sure, sir. And sir, another question, can you just give me some update on your astrology business side?
Astrology business side, we have a AI-based astrology, Astro Free Chat, and we have very good number of downloads and the usage. Again, we have to see what is the best way to monetize it. So it's still in the experiment stage.
Yes, sir. And lastly, sir, on these newer segments, are you looking for some sort of an inorganic growth or some acquisition or partnerships to accelerate this front?
If there is an opportunity, we'll definitely evaluate it.
Okay, sir. That's it from my side, and all the best for the future.
Thank you.
Thank you. The next question is from the line of Raj Shah, an individual investor. Please go ahead.
Hi, sir. Am I audible?
Yes. Please go ahead.
Yeah. So I had a few questions regarding the competitive landscape in the industry. So given the structural slowdown that we are seeing in subscriber growth, how large do you think the organized online matchmaking opportunity remains in India?
Okay. What is your question? Yeah, please go ahead. Yeah. Any other question?
My other question was that, do you think that the competition is intensifying from dating apps and other digital matchmaking platforms that target younger demographics?
Okay. Yeah. Anything else? Or that's it?
Yeah. One question was that, do you think there are any changes in the consumer preferences among younger users, particularly in urban markets, and how are you, trying to adapt to that?
Okay, thank you. In terms of the organized matrimony business, maybe it's over 1,000 crore or around 1,000 crore at this point of time. In terms of dating remains as a small segment, probably maybe 100 plus crore. And we also got into serious matchmaking. We launched love.com, and again still in the early stages, but having a good traction. So love.com is a serious matchmaking service from Matrimony.com group, that is LUV.com. In terms of structure changing, no, I think the matrimony continued to be the go-to destination for anyone who want to get married. So while dating is that's a small pie of the overall segment. So we don't see that, in terms of that dating or serious matchmaking services kind of coming even close to matrimony. Matrimony continue going to be the large part of the category, and dating will be there. It's a small segment, and because India is a large country, there are people for various services. So love.com are serious matchmaking largely in the metros, and there are some segment of population. So we have also the product to cater to this segment.
Thank you, sir. And just had one more question. So you had spoken regarding the many jobs monetization. From when can we expect that? Maybe some guidance on any numbers, if you can throw any light on that.
Many jobs we already started monetizing. Currently, it's only in Tamil Nadu. We already got more than 1 million users registered to many job platform, and more than 10,000 companies are using it. we started monetizing. So again, still in the early stages. So the end of the year, once you reach our revenue milestone, then we may expand to South or even pan-India.
Okay, sir. That answers all of my questions. Thank you so much.
Thank you.
Thank you. The next question is from the line of Priyal Thakur, an individual investor. Please go ahead.
Hello, everyone. I wanted to ask, in the core matrimony business, does the company continue to maintain leadership in the organization?
Sorry to interrupt, ma'am. Could you please come more closer to your answer? Priyal, ma'am, your voice is not audible.
Not audible now.
Hello. Let's talk.
No, it's continue our challenge hearing you.
The line has been disconnected. A reminder to all participants that you may press star and one to ask question. The next question is from the line of Saurav Shah, an individual investor. Please go ahead. Saurav Shah, could you please unmute your line and go ahead?
Audible?
Yes, sir, you're audible.
Hello.
Yeah, please go ahead.
So I wanted to ask you two questions.
Yeah, please.
Actually,
Saurav Shah, could you please come more closer to your answer?
No.
am I audible?
Yes, sir, you're audible. Please come more closer to your answer.
So the question is, does the company continue to making market?
No, sorry, this question was not clear. The company, what is it?
Does the company continue to leadership in the organized online market?
Sorry, I didn't get your question right. Can you come again, please?
So the line has been disconnected. A reminder to all participants that you may press star and one to ask question. The next question is from the line of Dharmesh Patel, an individual investor. Please go ahead.
Hello.
Yeah, please go ahead, Ramesh Patel.
Yeah, hi, sir. Thank you for the follow-up. So firstly, does the company continue to maintain leadership in the organized online matchmaking market?
Yes.
And sir, on the elite matrimony segment, how is that segment performing, and how much revenue can we expect from that in FY27?
The segment is growing, but again, we don't give the breakup of individual businesses, but definitely that segment has been growing.
Can we still get some sort of a ballpark number, if not any accurate number?
No, but as I said, Mr. Dharmesh Patel, we don't share the individual numbers, but definitely we see opportunity in each segment, and that's growing well.
Okay, sir. Thank you. No problem.
Thank you. A reminder to all participants that you may press star and one to ask question. The next question is from the line of Anmol Agarwal, an individual investor. Please go ahead.
Hello, sir. Am I audible?
Yes, you are.
Yeah. Hi, good afternoon. So sir, my question is regarding the customer acquisition cost and what are the trends that you are seeing currently? Also, I wanted to know about any kind of conversion rates and if there are any renewals that are happening, if you could help me.
There are nothing, any significant changes in terms of customer acquisition costs. It's been fairly at a similar level. In terms of in terms of renewal rate or conversion rate, definitely we continue to take steps to increase both first-time conversion rate or renewal rate. So yeah, we could definitely see that there's a marginal increase in this both the first-time conversion and also renewal on account of the steps we continue to take. Yeah.
Okay. Thank you, sir. And I had one more question for you.
Yes.
So, will you be continuing our investments in, say, newer segments? And also, how will they impact, our profitability? So, would there be like a short-term pressure that we would face in this due to this?
I think the losses will be on the similar level. In spite of that, we expect, as I told you, the profit to more than double. So we continue to want to invest because the newer opportunities. So it's a more of, we are generating profit, we have cash. It's more that it's important that we identify the newer growth opportunity beyond the matchmaking, so that, these things will add up in the future. So while definitely matchmaking has come to the double-digit growth, while we are taking two steps to further accelerate the growth, even the matchmaking, but however, we definitely see the bigger opportunity in the wedding service or other initiatives. So we need to invest and get the product right, then you can scale up. So while though you lose some money, but again, we believe it's all important to identify the next growth lever for the organization beyond the core matchmaking business.
Okay. Thank you. And I also wanted to know a little bit about the astrology business. So I understand it's a newer segment for us. And I just wanted to know how much are we going to invest, or how are we going to scale up this segment going forward?
No, we are just doing some experiment. So then we decide what to be done. So apart from that, we also invested in another AI-based astrology company. So once we experiment, we also, we saw the opportunity in another AI-based astrology company. So we have interest in this category. We'll see how it evolves.
Okay. Thank you. Thank you, sir.
Thank you. The next question is from the line of Rajiv Karra, an individual investor. Please go ahead.
Hi, good evening, sir. Am I audible?
Yes, Rajiv, you are audible.
Yes. Hi, good evening. So you mentioned that the organized matchmaking services market is approximately 1,000 crores, if I'm not mistaken. What would be the size of the or percentage of the unorganized matchmaking services market? And also, have you been seeing any trends of, the share moving from the unorganized to the organized market? That was one. And related to that, what part of this would be the online matchmaking services? And if you have seen any trends related to that?
It's very difficult to predict what is the revenue of unorganized, because unorganized market, we have probably thousands and thousands of mom and pop service provider, local marriage bureaus, individual matchmakers. It's very difficult. But obviously it's understandable. It is natural that the more and more people go to organized, because what the organized sector can provide, it's very difficult for unorganized players, because one of the core thing the matchmaking is about that the profiles and the service. What unorganized player can provide will be a limited profiles or limited base. While they may offer some local connect and personal touch, but obviously we do also personal services. What being provided by these people is there's a local connect, and that is there. So it's very difficult to estimate, or we don't I don't want to say some figure that I'm not sure of, unorganized. But again, the second part, definitely it's natural, or it's always the case that the more and more people move to the organized segment. Today, look at your Matrimony. You have a product for all segment of the population. You have a Jodi, even for the common people or non-degree holders. But again, the non-degree holders, not everyone would adopt online, because sometimes it takes people time to adopt these offline services, online services, I'm sorry.
Fair enough. So related question, in terms of the total weddings happening, if you look at it from that standpoint, out of the total weddings happening, what % would you say would be using online matchmaking services?
Look at matrimony.com alone, you may get, sort of close to, around 8 to 10 million people signing up. So out of 60 million people looking for life partner in India, that's almost like we are talking about 15% or more. So there are other players as well. We don't know how much of the overlap. So you may say that currently even put together, even sort of 15 million, you are talking about out of 60 million, it's almost 25% of people are looking for life partner are using this platform. Only I'm talking about the marriage platform.
Okay. So it's fair to assume that more than two-thirds of the market would still be, offline or using unorganized services?
I would say that everyone, say that kind of people can have a love marriage or they have the, the relatives. So it's not that everybody need to use a platform, online, offline, to find a life partner. So there are still friends and relatives, or the people can fall in love during college or at workplace. So why 60 million people look for a life partner, but I don't know, and not everyone even come to online. So considering 60 million people looking for life partners, 15 million people using online, and having said even the people using online, not everyone needs to find a life partner through online platform. So still they know they can find a life partner with other platforms, because people are using online platform doesn't mean that they may ignore the reference or option coming from friends and relatives. So you can exclude certain personal people, very unlikely they're going to come online. So even assuming that out of 30 million, now the 15 million come to online. So still there is enough headroom. So one is about getting the people to sign up on the platform. Other one is not everyone, even the 10 million, 8 to 10 million, what I told, our paid subscription are close to million only, or million. So the other things about it's not getting the people to sign up. Again, the conversion strategy is also another lever for the company.
Understood. So thank you so much.
Thank you. A reminder to all participants that you may press star and one to ask question. The next question is from the line of Dharmesh Patel, an individual investor. Please go ahead.
Hello. Yeah, sir. So just one question from my side now. So I just wanted to get an idea on the demand trend across, tier 2 and tier 3 markets, and how do you compare it to your sort of metro cities in India?
In fact, tier 2, tier 3 combining is bigger than tier 1 market. Yeah.
Okay, sir. And do you see, apart, so obviously quarter 3 is the most valuable quarter for the company, but apart from that, do you see any other seasonality in terms of quarter 4 and quarter 1 impacting the company in the near term?
Normally the Q4 and Q1 are the best quarter. Then normally Q2, Q3 are the quarter where there are in-auspicious period, a lot of festivals. So Q2, Q3, yeah, there'll be some impact normally.
Okay, sir. That's it from my side. All the best. Thank you.
Yeah. Thank you.
As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
Thank you very much for your interest, and thank you for all your patience. I know last year was I would say turnaround year. As you already communicated, Q1 we expect the turnaround to happen. The benefits start flowing in. Plus we also continue with our double-digit growth, or maybe high single-digit growth in billing, and the revenue to be doubled. And this will help profit to move up starting Q1 of this year onwards. So thank you, and see you next quarter, which I hope will be another best quarter. Thank you so much.
Thank you. On behalf of ICICI Securities, that concludes this conference. Thank you for joining us. You may now disconnect your line.